Hello everyone. Today we will discuss what caused the Great Depression and how the US recovered from it.
Hi Professor, I have been reading on the financial crisis the world has faced. One of the worst crises that stood apart was the Great Depression. In fact, many economists believe that it is the most severe depression ever experienced by the industrialized Western world. Could you please explain on how the world recovered from such a catastrophe?
That's a very good question, Adam. The Great Depression is indeed one of the worst financial crises the world has ever faced. One of the biggest reasons for the catastrophe was the gold standard.
Gold standard? I am not sure what that means.
In the past, most of the international business was about trust and trade. Let's say the US is going to trade with Singapore. US would say, we will give you goods if you pay us in gold. We don't want your currency notes because your pieces of paper can just be printed. Hence, countries had their currency values directly linked to gold. Such a system is known as the gold standard.
That seems like a reasonable solution. How would such a system be problematic?
This system could seem reasonable on paper, but it has its own flaws. In the late 1920s, investing in the stock market as a way to increase wealth became very popular in the US. Speculators borrowed heavily from banks to buy stocks and companies. As they poured money into the stock market, stock prices soared. In 1928, the Federal Reserve finally tightened its monetary policy by raising interest rates on borrowing. The Federal Reserve took this action to discourage loans to speculators who were riding a wild Wall Street stock market boom. The Federal Reserve's higher interest rates succeeded in calming speculation on Wall Street. But, during the summer of 1929, uncertainty about future company earnings led investors to sell stocks. Panic hit Wall Street in October, and the stock market crashed when stock prices plunged sharply and continued to fall, causing a recession. Usually when countries enter into a recession, they need to loosen monetary policy, meaning they have to increase money supply to reduce interest rates. However, this was against the rule of the gold standard because countries could only print a certain amount of currency based on the amount of gold they had. They did not have the discretion to print more money than already allowed. So during that time, because the countries were not able to respond, the recession worsened and turned into the Great Depression. The pain went on until Japan decided to leave the gold standard. They decided that the interest of their country comes first, and in that spirit printed a lot of yen in order to lower the interest rates. Not surprisingly, Japan turned out to be the first country to recover from the Great Depression. Soon other countries followed, and eventually the gold standard was gone. As the monetary base shot up, the interest rates eventually came down. It was due to that change in policy that the United States was finally able to escape the Great Depression.
It all makes sense now. Thank you very much, Professor.